Hello again from Core Wealth. Today's video is about the February markets and the impact of that on our portfolios. But because of what's happening globally around the coronavirus and its impact both on our lives and on our portfolios, we'll be covering the more recent events as well and just talking a bit about that in a lot more detail. So if we start with February, February was a weak month for markets both locally and globally. Equities down across the board. The rand did weaken in that period, so it was a bit of a tailwind for the offshore exposure which we have in all of our balanced portfolios, but still a negative month. If we look year to date to the end of February, global equity slightly positive, just over 2%, but the local equity markets down about 10% and listed property down even more than that. So let's talk about what's happened in the last 2 weeks. We've had two major shocks to the market, one being the further spread of corona and the other being what's been happening in the oil markets. These two together, we've seen the markets drop now globally. Equities are down around 20% in US dollar terms, and in South Africa the JSE is down around 22%, so similar levels, and this is broadly what we're seeing around the world. The rand over this period, however, has weakened by around 16%, and so our global portfolios have benefited from that, as well as the rand hedge stocks in the portfolios. Now if we have a look at those two major impacts, the coronavirus, the further concern has come from the spread of the virus essentially to Europe and the US, and the impact that will have on trade and travel in particular, and expecting company profits to be impacted, which they will be in the short term because of that. The oil price has come down from $55 to around $35 because of an oversupply and there not being agreement between the suppliers of oil to actually cut back on oil. So the volatility is very high at the moment in the markets. Last Thursday, the 12th of March, we saw US markets and markets in fact around the world falling by about 10% in one day. The following day, Donald Trump announced some emergency measures that were being put in place to contain the virus and allow them to handle it better. And we saw the US market up on Friday the 13th by a further 10%. So huge swings just between 2 days on the markets. Cyril Ramaphosa, the President of South Africa, addressed us on Sunday evening, yesterday, and informed the country how they were going to respond, what actions they were taking to limit the spread of the coronavirus. And he said there were two things that were important things to guard against. One was fear and the other one was ignorance. Those two things often drive us to make very poor decisions. And so in order to address that, we're trying to understand things, so avoiding the ignorance. And once you have knowledge, you can then manage the fear better. Now, we're not saying there is no fear. When markets are down to the degree that they are now, it makes us fearful. We wonder about what the future is going to hold. Now, it's important to realize that as much as the corona pandemic is not something any of us have seen in our lifetimes, we have seen market crashes in the past. And as recently as 2008, which 12 years ago, albeit, was something that was extreme to the degree that, in fact, people were worried that the whole financial system globally could have collapsed at that point in time. It's easy with hindsight, as it always is, to look back and say, well, yeah, look, we knew it was going to get better. But perhaps that just indicates something of the resolve of humankind to actually get through difficult situations. In my lifetime, I was in the markets in 1987, although be it as a university student, and that was when you had the October 87 stock market crash, markets down over 40%, bond markets down about 30% at that point in time. I've seen further crashes in 97 with the emerging market contagion, 98, 2003, 2008 was the last really extreme one, and was the biggest one in the last 50 years. And the point is that we can take those and we can learn from them. So if we look back, our most aggressive strategy at Core Wealth is the Core Wealth Flexible strategy. It's for long-term investors and for aggressive investors who can stomach volatility. But we had a look at this strategy. If we plotted it back in actual terms from 2007, by February the following year, that strategy had fallen from its peak in around August by 27%. The stock market at that point in time was down over 40%. And we just had a look and we said, if an investor had said, okay, after the first 12% pullback, let me get out of flexible, move into a cash strategy, and just stay in that cash strategy into the future. Their investment, and we did this on a client who had a specific amount of money, 700,000 Rand. If they'd have started with 700,000 Rand in December 2007, pulled out after a 12% pullback, so they missed the following 15% drawdown and were in a safe asset of cash. After 15 years, their investment, their 700,000 Rand, would have grown to 1.34 million Rand if they'd have been invested in cash. However, if they'd have stayed in the flexible fund, within 2 years, or within just over 2 years, the flexible fund would have been ahead of their cash investment. And at the end of January 2020, so some 13 years later, their investment in the flexible fund would have been almost 2.6 million. So nearly double what they had in their portfolio, their conservative, reactive portfolio of going into cash. And that's an illustration of what we need to guard against as we get fearful. We need to understand what is driving markets, what are valuations, because valuations tell us in the long term what sort of returns we can expect. And stock market valuations, and in fact in South Africa bond market valuations, because of this reactive fear, have got incredibly cheap. Now I don't know if they're going to get cheaper still over the next couple of months, or whether the market turns very quickly. We can't tell that in the short term, but we can tell that in the longer term you will be rewarded for buying assets or staying invested in assets that are this cheap. And that's the kind of thing that we want to help our investors understand, and that we're applying ourselves. We have emotions too, and we get fearful as well when we see this kind of volatility. But we have to come back to rational and reasonable methods of evaluating what's happening and apply those to portfolios. I'd like to end off this video with two very practical points on how we respond to Corona. The one is the most obvious one, and I'm sure you would have heard last night in our President's address. You would have also heard or seen lots of things on social media in this regard. It's the hygiene aspect of applying the hygiene aspects to our lives to minimize the potential risk of spreading the virus and slowing it down, most importantly. And things like not shaking hands anymore. These are all things we're doing at Core Wealth, again, just to minimize the risk of the virus spreading. Our cleaning ladies regime has been ramped up dramatically this morning in terms of cleaning door handles, disinfecting even the buttons on the coffee machine. Just things like that to, again, reduce the risk. Wash hands. They're recommending 10 times a day to wash hands. Now these are all things that might sound a little bit OCD, but are definitely helpful in combating the spread of this disease. These are all things we're doing at Core Wealth, and so we're not closing the doors, we're not stopping seeing people. We don't need to, because we've put these things in place. However, if you'd prefer to meet but not in person, we can do that telephonically. We can do that via video conferencing. We've got software that we can show with you and share with you that's at no cost, and have video conferences. It's something we do a lot with our international clients already anyway. The second thing is our response to business. Now, if you don't own a business, don't stop listening here. But the worst thing that could happen, because the economy is going to slow down, there is an obvious economic impact from the coronavirus, whether that be because tourists are not coming to South Africa for the period that we're closed to tourism, or whether it's just production has slowed down, whatever. It is going to impact our economy. But what can we do to try and minimize that negative impact? Don't become a recluse. Don't go and hide away and not do anything. Think of creative ways that you, in your life, can apply to keep the wheels of industry turning, as it were. So an example I was sharing with our cameraman earlier was, if your company says, okay, for the next 2 weeks we're not actually going to have people in the office, everyone is going to work remotely using technology to do that, then you may end up with 1, 2, maybe even more than 2 hours a day that you don't have to travel to work anymore because you're at home. That saving of time could be used to do something you may have been planning for a while. For example, you want to reorganize your garden, you want to paint your study. Those are all things that are economic activities as well, in that you need to go buy paint, you need to go buy fertilizer, go and buy some flowers at the nursery, what have you. Do those things in that extra time that you've got. As businesses, let's not shrink back and stop doing business. Yes, we've got to manage our business as well, but if we've got longer term projects and we can see the future for those, let's go ahead with them, again, just to keep things going. So those would be my 2 closing remarks. Be super vigilant on the hygiene side of things. Let's minimize the spread of this disease and slow it right down, because that is possible. We've seen it globally, it works. And then secondly, let's do all we can, think creatively of what can we do to actually keep the wheels of the economy going. As usual, if you've got any questions, please give us a call, drop us an email. We'd love to engage you around any concerns you may have. We don't want our clients to panic. We want to understand the situation, and we'll get through this. The world has got through worse pandemics than this in the past, and we have all the advantages of modern technology to help us get through these things again this time, which I'm sure we will. So good chatting. Thanks for watching.